What do Hamilton and The Wizard of Oz have in common? Both of those productions pertain to gold as a currency and whether or not silver is an appropriate substitute. Gold and silver historically have been relatively benign assets, but last year they emerged as our best performing assets. Now, why is that? Well, gold is sending us a signal that there could be some chaos and disorder in the geopolitical side. And at the same time, there is a tremendous amount of monetary money printing, monetary looseness by most world governments. That's why central banks are hoarding gold. And that is why our gold and silver investments perform so well. That said, the markets overall performed very well. The S&P 500 had its third straight year of positive gains, and it was outperformed by European and emerging market stocks, both of which gained almost double the amount of the S&P 500. Now, of course, if we measure both of those in gold, the S&P 500 lost and the European markets were flat. The economic data is mixed. There's weak job growth, but there is strong consumption from wealthy households. Inflation continues to be a little bit higher than we expected. So we have this interesting economy where you've got households that live off of stock market gains, and we've had quite a few years of gains, that are consuming and driving the big 70% of GDP that is consumption in the US. At the same time, we have the emergence of large investments in the artificial intelligence stack. What that means is that these companies have been putting so much money, investing so much money into AI that it has actually made a meaningful impact on GDP. What's interesting is the more they invest, the better their performance looks, which then turns into the Magnificent Seven, which are 7 stocks that are 35% of the S&P 500. Those 7 stocks continue to outperform, which puts more money in investors' pockets, which drives more economic growth. So it's a sort of virtuous circle between the AI firms, which drives GDP up, and the wealthy consumer who lives off stock market income, who also drives GDP up. Now, the question about the AI being in a bubble comes down to the question of where can they get such returns on such large investments. And I would argue that the largest place is the $13 trillion job market. That is a place where if you can reduce jobs, you can show a positive return on investment to these AI investments. The upshot of that is that we're going to have an economy where you have sort of investor take all, meaning if you're an investor and you're in AI, you're going to continue to get wealthier. Whereas at the same time, if you are looking for a job, or if you're just out of school, or you're not able to participate in that market, you might see the job market continue to get even tighter. So you're going to have a big divide between two different groups of people if this continues. That's my outlook for the year. We continue to look at a very positive investor environment. There's a tailwind from the both regulatory and fiscal side for investors. Of course, longer term, there are concerns about high national debt, growing deficits, and even the question of whether the dollar can maintain its reserve currency status. All of these, once again, play into the hands of gold. So we're pleased to present our clients' results to them for the year. When I think about what lies in the near term, we have a few exciting updates to how we do financial planning. So 70% of Americans do not have a will, but this is very important to protecting your legacy. To address this, we've expanded our partnership with Trust and Will to offer expanded trust estate planning resources. So we will be suggesting that our clients utilize this resource, especially in certain situations like when their kids turn 18 or when they have a change of circumstance and they need a temporary solution. We've already paid for that, for those wills in advance, so it will be costless to our clients. We also noticed that the One Beautiful Bill Act has clarified certain key tax provisions, including new tax brackets, an increased set of deductions for state and local taxes, updated exemptions, and things like that. This has created a lot of opportunities, and we are integrating that into our financial planning to help our clients. I often joke that the biggest financial planning problem most of our clients face is the fact that we've made them so much money that they need to teach the children well. We need to teach them how to inherit such large amounts of wealth. To that end, we've started Camelota Kids. What is that? Right now, it's 5 modules that we think are what wealthy kids need to learn. They are things like how to think about your budget, how to think about your career choices, how to think about debt, or both borrowing and lending. How do you set up your financial infrastructure? How do you pay your bills? How do you manage the budget? How do you think about things like investments, buying your first house, things like that? Also, we have one module called Street Smarts, which is just things you should know about how the world views you as you go through it. We're really excited to roll that out, and we will let you know when it is time for the kids in your life to engage with this module. It's not really a class, it's more like a coaching discipline that we do with the kids of our clients to help them succeed and propagate the wealth that we've made for their parents. Lastly, we've been partnering with some elder care institutions to really flesh out the cost of long-term care. We found that traditional planning assumptions often fell short. This year, we developed a new cost assumption model to better capture the full range of support needed as a person goes through the elder care system. We will be integrating this into all of our financial plans, and we will reach out with other resources as they're needed to help clients transition into this phase. As we enter 2026, Camelota is celebrating our Silver Jubilee. We're 25 years old. And it's been a really amazing trip. And we founded this company on a simple idea that we could deliver institutional level investment advice and investing to wealthy individuals. And we've certainly fleshed that out. We've seen lots of milestones, and we see many more ahead. So I just want to thank all of you for your trust, your partnership, your kind words, your support. And I want to wish you a very healthy and prosperous new year. Thank you.